Hey everyone, Cameron Lombardi back here with another stock market investing video. Today we're going to be talking about how selling options and owning equity in companies can really grow your account over time between generating passive income and growing with the positions that you own. So before we get into that, guys, I want to say thank you to everyone that's been watching the videos lately. Everyone that has liked the videos, subscribed, left comments. It really means a lot that the information that I'm posting is helping people, because that's my overall goal for this channel, is to just post progress, show how selling options and investing in the stock market can financially help you over time. I'll definitely keep posting more and more videos for you guys. Let me know any videos that you'd like to see in the future down below in the comment section. And if you'd like to get started on your investing journey, use that first link in the description. It will take you to Robinhood. I like Robinhood a lot because it's a super user-friendly app, especially for new investors. It doesn't charge you any commissions on your trades. And one other really nice thing about Robinhood is it offers a high interest on any cash that's not invested in the stock market. So you can actually earn yourself just some passive interest on the money that you have invested. It's much better than leaving it in most banks where you're not really getting any interest. So with all of that being said, guys, let's get right into the video. So let's scroll down here to look at my current options positions. I went over the first two here in a previous video. So we have an Amazon 117 strike put sell. So it's currently worth $12. I sold it for an average credit of $71. And so you can see there at the bottom, we've gained $59. That doesn't mean that I've gained any extra than that $71 credit. It just means that I can buy this option back for $12 and get out of my obligation of the $117 put sell on Amazon. So this trade is definitely going in our direction. The same day, we also sold a Google put at the $120 strike. We got a credit of $85 for that. Also going in the right direction for us here. I'll probably continue to hold this one throughout most of the week. Google is definitely a stock that I want to continue trading on, as well as Amazon. And I may even just go another week out here and sell another put, maybe around the $120 or $119 strike, just depending on what the stock does here tomorrow. Amazon and Google have established themselves pretty well in the low to mid $120 range that they've been trading at. So I'm definitely happy to own them if they drop below that. Again, we had a $117 strike on put sell on the Amazon trade and then $120 on the Google trade. So I'm more than happy to own these stocks below that $120 price. All right, so if we get back into our other options here, we have a Bank of America covered call, selling it at the $30 strike for this week. I got an average credit of $15 for this trade, and Bank of America really hasn't moved too much this week, so that will continue to just decay over time. And if I want, maybe I'll buy out of this call for a couple bucks and then sell another one for the next week. Again, Bank of America is not one that's going to be a home run play by any means week to week, but it will earn you consistent income. It will pay you out a nice dividend. And over time, I think the shares will appreciate as they get back to that mid $30 range where they were trading at prior to this banking crisis that went on. So Bank of America, really good stock to do the wheel strategy on, sell covered calls, sell cash secured puts, especially for a smaller account or someone that's just getting used to doing this strategy, because it doesn't move much week to week and it's a safe play. It's a safe stock to own. One more position I want to review with you guys is my Delta Airlines put that I am selling. So last week we did get assigned on the Delta shares. I sold a 37.5 covered call, and obviously the stock did surpass that. So now it's at 40.29. And so I went ahead and just sold another put back at that 37.5 range, and I got paid an average credit of $23 to do so, and that expires next Friday. So I'll probably just keep selling puts on Delta Airlines. If we get assigned again, I'll flip back to selling covered calls. If not, I'll just keep selling puts. It's a stock that I want to continue to trade within the $40 range here, $30 or $40 range. So I'm more than happy to continue trading Delta Airlines. Now, the rest of the portfolio has not changed much. We still have about the same positions in most of the stocks here, but I want to talk about a combined method of owning shares of companies and also selling options. And just by looking at one stock here, it's a great example of how selling options on stocks can benefit you at times and how owning stocks can benefit you at times as well. So let's take a look at Google here. Over the past 3 months, it's up 37.5%. right? So that's a huge gain. It was below 100. It was in the 90s and even the 80s for a little while, and it is up big. So this is where owning equity in the company can earn you a good amount of money over time. However, if we go to the monthly chart and we look at the last few weeks here, we can see that it really hasn't moved too much. 122 to 123 in that range right there. It's kind of been going sideways with some downs and some ups, but overall pretty sideways here for the last three and a half weeks or so. So what that means is, yes, it's great to hold stocks over time so that they will appreciate for you. A great way to look at that is a reflection on the last 5 years. We can see that owning shares of Google would have made you 118% return in the last 5 years, which is amazing. But again, it's these periods here where it just trades sideways, where if you're selling covered calls and cash secured puts and you're earning $100 to $120 a week, you would have made more money than just holding on to the stock over the last few weeks here. Stocks tend to move sideways after big moves up and big moves down. And so during that time of trading sideways, it's a good idea to sell covered calls and sell cash secured puts and earn yourself some premium. And then you can just use that money from the premium that you get to reinvest in the stock, right? So for example, on my sell put on Google here, I got $85 to sell this. And if I waited till expiration and I did not get assigned the shares, I would just keep my $85 and I could use a portion of that to actually go ahead and invest in the stock, which I want to start doing and building up an actual portfolio where I'm not just strictly selling options, because over time, if you do own some shares of a company, it can definitely help your portfolio appreciate. A nice example here is with Tesla. Tesla over the last 5 years has done absolutely incredible. I mean, 1,061% in the last 5 years is insane. They've had multiple stock splits. So just owning this stock alone would be a great investment to buy and hold over the years. But again, during those periods of sideways movement, it is nice to sell some options in the meantime. And that income can be used to either have a larger cash pool to sell more options, or you can invest it into equities and build yourself a portfolio. I think doing a combination of the two is probably the best way to build your portfolio over time. If you want to see your portfolio continue to grow over time, having positions where you buy and hold is definitely smart to do, and selling options is going to generate you some nice income on top of your positions. So both together are a really powerful strategy to grow your account over time, and this is the strategy that I'm going to continue to implement here to grow the account. If you guys have any stocks that you've been trading on, if you've been selling options or you've been investing in, let me know down in the comments below. I'm definitely looking for a couple more stocks to be trading. I like Rivian, I like Uber. I might look into these stocks to start selling some puts on. Also, Amazon and Google have been my bread and butter lately. I really like those two stocks, as well as Bank of America and Delta Airlines. I've been trading on them for a while now, just selling puts, selling covered calls, and it's been working out really, really well. And again, I'm going to use some of that premium here that I'm getting from selling these puts to then go ahead and invest in Amazon and Google and some other stocks as well that you see here, just to build up some equity over time and grow as those companies grow as well. Thanks again, everyone, so much for watching the video, and we'll see you in the next one.